Hello, everyone. We're right at the top of the hour. Thank you for joining this month's Product Pulse, where we'll be deep diving into our analytics for income calculations in mortgage lending. Please use the Q&A module to input questions. We'll be happy to answer any of those questions throughout the presentation as well as at the end. My name is Craig McKeon from the Ocrolus marketing team, and today I'm joined by Rebecca Seward, Director of Product, to go through our mortgage lending offering. I will hand it over to you, Becca.
Great. Thanks, Craig. So today we're going to be going over our dashboard for our Analyze product. We'll be going over a new feature that was recently launched in our aggregated income summary tab, which shows the book level income for all of our borrowers and all of our users across the book that was uploaded. We'll go through the income calculations and how they vary, what your options are in terms of flexibility. And lastly, we'll go through some common tips and tricks that we see lenders using to maximize the efficiency of our product. Can you see this screen? Good, Greg?
Yes, looks great.
All right, great. So we recently launched this brand new income summary tab. So for those that are familiar with our dashboard screen, or for those who are unfamiliar, when you land into the book summary overview, there is a tab over here on the left-hand side called income. And this is where you will come to review all of the analyze work that has been done on this book. We introduced a new landing page in the summary tab, which tells you the book level income for all of the borrowers that we identified and all of their various streams of income. So on this page, we can see that we have two borrowers in Jill and Jack Smith, and it will show us through this color bar the distribution of income for each. So I can see here that Jill Smith has around 22,000. Jill Smith has more than 50% of the income for this book, and Jack Smith has this much. You can also toggle between these to see if you remove a borrower, what the impact of that will be. But this landing page is meant to be just a quick preview of all of the various streams of income for each borrower so that you can dive down deeper into the income. Now, for those of you who are unfamiliar with our Analyze product, we do perform income for various different streams of income. So we have wage earner income for borrowers who are employed through, a W-2 employer. We have self-employed for individuals who may own businesses, 1040s, 1120s, 1120S, 1065 partnerships. We have rental income, and then we also have some common passive streams of income, things like disability, social security, pension, etc. So let's go ahead and dive into each one of these income types. If I click here on Jill Smith, on her wage earner income, it will take me directly to her income within the wage earner tab. Now, you will see alerts and messages. These pertain to this specific income for this borrower and employer pair, which is Jill Smith for Smith Catering Service. If Jill had multiple W-2 employers, you could select those from this drop down here. And if you have multiple borrowers, you can sift through them with this drop down here as well. We calculate 4 different income calculations, soon to be 6, for all of the various programs that are underwritten for a common QM mortgage loan. So for this hourly employee, we can see that there is a monthly income calculation, a year-to-date income calculation average, and then if we do have accessibility to it, we will look at prior year W-2s to perform a year-to-date plus 1 year average and a year-to-date plus 2 year average. Coming soon, early next year, we are introducing 2 more calculations. One will be a recent year average without the year-to-date today, and then a recent year plus prior year average. So that would just get rid of the year-to-date in those calculations for some of the common calculations needed for government loan programs. But for now, we're just looking at a basic hourly employee who has multiple income types, multiple calculations here. And what you want to do when you come to this screen is review the extracted field values to see the sources where those came from and also validate the values. So if I click on this value here, I can see the pay stub from which it was extracted from Smith Catering Service. I can see that the rate was correctly extracted at $25 an hour and that Jill Smith worked 80 hours a week for this particular pay period. So if I close this out, I can validate those two field values here. Now, sometimes you may want to operate within the margins. So if I want to update this to 40, this was previously manipulated by someone who came in here, I have the ability to do that. So you have the flexibility to not only choose the correct final monthly income calculation within these radio buttons, but you also have the flexibility to control the values as well. If I navigate over to self-employment, and this will ask me if I leave the page, whether or not I want to save those changes that I just made, I'll discard and proceed. If we come over to self-employment, we can see Jill Smith's coffee shop. So our self-employed income screen is meant to mimic a classic 1084 cash flow analysis or some of those flexible worksheets that underwriters are used to working within, like the Enact forms or the MGIC forms, some of the Excel spreadsheets that a lot of lenders are used to working within. So at the top, we'll see our alerts and messages once again for Jill Smith and her coffee shop. You can see here that non-recurring income was detected on the 1065. Ocrolus naturally excludes non-recurring income from self-employed borrowers just because we don't always have the documentation necessary to validate whether that non-recurring income is likely to continue and whether it should be included in the average. So by default, we will back that out, but you can always choose to add that back into the income value. We also have noted that there were other deductions found, but not used, as there were no federal supporting statements to show what that other deduction was, whether it was something eligible like casualty loss or amortization. So if we don't have that supporting documentation, we will not include it, but we will alert you that you need to take a second look. And then finally, if and when we do not have the IRS Form 8825, we will ask for you to validate that it is in fact in file and that line 14 matches. So let's scroll down to the 1065 section and we can look quickly at all of the income that was extracted. Once again, if you click on any field value, you will see from where it was extracted, the exact line item and the form that it was extracted from. And then we can look at the non-recurring income that was backed out of the calculation. So if you want to adjust this, you can click here to edit, change this into a positive, and then now it will include that non-recurring income in the final calculation. Once I've made all my adjustments, I can hit save, and now we can see the total income for Jill Smith and her coffee shop. Navigating over to rental, we look at the Schedule E. So for Jill Smith, she is perpetually self-employed, it seems. She not only has some businesses that she has partnerships in, but she also has rental properties as well. We can see here that there are two different properties, 123 Main Street and 257 fake address. Very clever addresses here coming up from the Ocrolus team. So you can calculate using either the Schedule E or lease agreement or Fannie Mae Form 1007 or Form 1025. You can kind of toggle between these two depending on what you want to use. And we will do the 2-year average calculation just like we did with self-employment when we have those 2 years available to us. You can scroll down, once again, see all of the values that were extracted off of Schedule E to calculate this income. And then use that to make your final decision. And then finally, we have other income. So within other income, we have common passive income types. For Jack Smith, we have retirement pension and annuity, and we also have Social Security income. We can see here that these were extracted from the SSA 1099 and the pension award letter. We can click on all of these values once again and see this is from the award letter. We can see the value that was extracted. We can also come down here to the Social Security income and see where we were using these values. Now, we will be introducing improvements to gross up percentages in Social Security within the next 30 to 60 days. So look out for an announcement on that. But we do support the extraction from the award letter today as is. I will pause for a moment to see if there are any questions, but otherwise we can keep going on a couple of different features.
Excellent. Excellent. We do not have any questions yet, but please use the Q&A module if you have any questions that you'd like to ask.
Okay. So, a couple other features that I do want to show off. The first, as I mentioned, are these alerts and messages. So, one thing I want to call attention to is if we look back at this summary page, you'll see that there is no income showing here for Jack Smith. It is showing as $0. With this income summary page, we do try to back out any inactive employers. And since this is a test book and the pay stubs are quite old, we don't know if this employer for Jack Smith is still active because the pay stubs are so stale. So if we look at the wage earner income, we can see that he does in fact have employment, Jack Smith, for finance and insurance company. And we can see alerts and messages that this pay stub or WV is older and the underwriter or processor may need to request something more recent in order to validate that this is in fact still an active employer and this wage that we extracted is still accurate. We can always adjust the dates and times depending on customer feedback on when we determine something is active or inactive. And so we're actively looking for feedback right now from our customers to see what is most correct for the most common guidelines that are underwritten. But in general, we try to look at one, does a WVOE reference that the employer is active or inactive? Or two, is the pay stub or verification of employment form recently dated such that we feel confident that this is still an active employer? One other thing I want to mention here about some other variable income types, things like overtime, bonus, commission, unless we have history to tell us that this is income that is likely to continue, we don't always include that income in the default total income calculation. So for example, here, we can see that there was an earning that was extracted from the year-to-date pay stub, or sorry, from the most recent pay stub. We have a year-to-date stipend that is showing at $487.50. We use this to calculate that income for that pay stub. However, because we did not have any history or documentation to show that that stipend was something that was likely to continue, we did not include that value in the hourly calculation. Now, of course, you can choose to include that, and all you have to do is simply click on this radio button, and you can see that miscellaneous income included in the total. But by default, for variable income types of that nature, things like stipends, tips, bonuses, commission, overtimes, things that we need a history to confirm its likelihood to continue, we will not include it by default in the total. If I navigate back to self-employed, I also want to mention that we have the liquidity ratio. So the liquidity ratio, when available, will be calculated for business earnings. So if I click on here, I can see the quick ratio was calculated for Jill's coffee shop. And if I scroll down, I can see exactly the values that were extracted to calculate this liquidity ratio. And you can modify them if necessary, whether or not you want to use the current ratio, quick ratio, or the Schedule L assets or liabilities. So this can be used very quickly, whether it's a green or red, depending on the value of the liquidity ratio, to quickly get a sense of your borrower's business and how well it's tracking and whether or not it's going to be something that is viable to be used in a self-employed income scenario. I'll pause there to see if there are any questions before we go into tips and tricks.
Awesome. We do have one question here. What would an ideal workflow look like when evaluating income for, I'm assuming, maybe a new client or a new user?
Sure. So my recommendation for new clients who are just setting up Analyze or Ocrolus in their workflows is to actually start top of the funnel with the summary tab. When you're initially collecting pay stubs, W-2s, employment documentation from the borrowers, automatically upload those to Ocrolus to get that initial calculation for pre-qualification or scenario desk building. So if you're a loan officer, I would recommend coming to this summary tab to review not only the distribution of income across borrowers, but the book level income that's ultimately going to be used to make a decision, just to get a quick review. Then, as you move down funnel, I would suggest this to be used by either loan officer assistants or loan processors to see if there is anything that needs a second look. So, for these errors that are showing, or these alerts and messages that are showing for self employment, as an example, we can see that we would need to look for an 8825 to validate line 14 and line 16 match. Or maybe if we can see that there is a decline in income year over year, that might be something we want to get a letter of explanation from the borrower, or we might want something more recent like a balance sheet or profit and loss statement to show if it is still declining, something that is more year to date. So these alerts and messages can help processing teams or teams that are pre-underwriting to gather the necessary information needed to submit a clean file over to underwriting. And then finally, once it reaches the underwriter, the credit decision maker, I recommend that they come here first to Ocrolus to review the income values that were extracted, to review the income that was calculated. They will be the ones that actually go in and validate the accuracy of all those field values and finally choose the income that's ultimately going to be used for the approval decision.
I
Great.
think we can probably jump into tips and tricks. If you do have any questions, please submit those in the Q&A and we'll continue to address those.
Great.
Awesome. Our first tip and trick is really around um, the different entities that are involved in Ocrolus's income calculations. So think about your borrower, your employer, different rental properties. Could you walk us through merging an entity?
Yeah, of course. So, as Craig was mentioning, at times our system will not always realize that two entities are the same, whether a business has a DBA or something is slightly off, where one variation of an employer name on a pay stub is different enough from the variation on the W-2 that we could not validate that those were in fact the same employer. I don't have an example of that employment on this book, but I do have an example and it works just the same for rental properties. So if I look over here and I can see that 123 Main Street Ocrolus and 257 Fake Street are two different entities, if I click on this merge properties and I select these two properties and I say to merge them into 123 Main Street, that will make it so that all of the documents that pertain to both of these addresses will merge and we will recalculate the income and combine those two for 123 Main Street. So, say for example, you have employer name one that exists on the pay stub, employer name two on the W-2, and you want to merge those two employers, it would function just the same as this. So if I go over to wage earner, what that would look like is you would see an option here for merge employers. You would merge those two. We would recalculate the income, and hopefully you would see some of those alerts and messages go away if there was missing documentation at play.
Yeah, oftentimes I think when we see that occur too, the question might be like, I don't see a pay stub or a W-2 for this employer. So you do want to always double check that you've gone through and looked at the different employers for that borrower to make sure that there is just the one that you're looking for if you suspect that one might be missing.
Right.
To that note, how about the ability to switch between non-default doc sources?
Yeah, of course. So down here, we can see the 3 to 5 sources that were reviewed and included for this income calculation. So we can see that two different W-2s, and we can actually look and see the exact W-2 that was used, are included in this calculation, along with one pay stub that we prioritized. If you received a more recent pay stub, we're about to enter year 2025, and you receive the 2024 W-2 and you want to recalculate income, you can select the pay stub or the source and reapply so that we can update the income calculation. So you can see here, after I applied a new pay stub, the hours adjusted, the monthly income adjusted. So if you're receiving new documentation or you want to change which pay stub is driving the income on the left-hand side, you can control that within the sources here.
Lynn, how about the ability to either include or exclude a specific borrower for the calculations?
Sure. The best way to do that would be utilizing the summary tab. So we can see now that we have these checkboxes that are listed next to borrowers. So say, for example, you're scenario building and you want to figure out whether or not Jack needs to be on this loan. Perhaps he has a lower credit score that's driving up the interest rate, and you want to see if Jill qualifies on her own. You can remove Jack entirely from the income, and you can see how Jill is faring with income on her own. Similarly, you could do that with Jill. You can see the distribution of income between the two borrowers and whether or not you should exclude or include one as needed.
Excellent. I love the new scenario builder. That is pretty awesome. How about next we look at the change log?
Yes, great point. So we introduced changelog to assist our customers in tracking down changes that happen within income across all of their users. So, for example, I've made a lot of changes just in the time that we've been on this call. You can see all of the edits that were made at an individual field level, at a source level, etc. So this is really your sort of audit trail, so to speak, to see all of the changes that were made across all of the employers at what time, who made them, because you'll always have the email address of the logged in user to see what changes were made. So this is a great place to start if you had one income at one point and that income changed. You can see who made the changes when and maybe track that individual down to see why they made those adjustments. This is also great for compliance reasons, just to make sure that if at any time you make changes to the calculations that Ocrolus provided, you have that trail of activity here.
Awesome. Another great feature that goes hand in hand with this, I think, would be comments.
Comments, yes. So just like activity log or change log, we have book level comments. So if you want to communicate a change that you're making to another team member, or you want to make a comment for yourself to review later on, let's say, for example, need to request 2025 W-2 in January for Jill Smith. If I send that off, it will add that comment here so that you can have that communication back and forth to other team members as you're making decisions on this file.
Awesome. And I think while we're up in that part of the dashboard, looking at the exports that we have available.
Yes, of course. So there's a couple of different options when it comes to exporting. The first is a PDF printout of the income data on this book. So if I click on the export dropdown, I can see income data here and I can click on PDF. So this is a great way for you to download a printable copy of the income that was calculated on this book if you wanted to share it with an investor, if you wanted to put it in your system of record, whether that's your loan origination system or your CRM, whatever it may be, wherever you would want to keep a record of this, you have all of the calculations and also all of the documents that were used across this book, which is just a great source for you to have. Now, if you are an Encompass user and you're using Ocrolus through Encompass, the other quote unquote export option would be to import these values directly back into Encompass. So if you're an Encompass user, you will see a button here that says import to Encompass, and then you can import the total income values directly back into the 1003 for that WVOE record.
Excellent. And I think one more item we could look at too, and please don't hesitate to submit questions to the Q&A, but looking at the index tab and being able to review the different document sources in there.
Yeah, of course. So, as we mentioned, you do have the ability to control and see the sources that are driving this particular income calculation, but that doesn't show you all of the documents that were processed across the entire book. So, for that, we recommend that you navigate to the index page. Within index, we will show you all of the documents that have been processed across this book, how Ocrolus classified them, and if there are any uniqueness values that were extracted for that particular book. So here I can see all of the different document types that were processed, how many of those document types Ocrolus processed. So if I go down here to bank statements, for example, I can see 5 bank statements were processed and bank statements were not used in the income sources that we just displayed. But you can see some uniqueness values that also enable you to see what this bank statement is, who it's for, what pay period or what statement period it belongs to, what account it belongs to, etc. So you can just quickly validate that you have all the documents you need on file. There are ways for you to filter this page as well. You can group it by document type, which is the default, or you could group it by uploaded date. So if you know that borrowers are trickling in documents over time, you just got a new batch yesterday, you can filter it by upload date and just look at the documents you received yesterday. You can also sort by oldest or newest by that upload date as well. And then finally, there is a search function that you can use. Let's say, for example, I just want to look at documents that have Jill. You can see that just went down to 18 documents on the left-hand side. And if I look at all of these, I will see that Jill was extracted and is in the uniqueness values for all 18 of these documents. So this is a great place to start just to make sure that you have all the documents you need on file. And if there's any question as to why a certain document was or was not included in the sources, you can just come here to make sure that Ocrolus processed it to begin with.
And lastly, back on the income screen, I'd love to just see at the bottom, this is super underrated, but we do have documentation on each of our calculations that take you over to the Ocrolus doc site. Definitely, if you have questions and you're exploring different features and functions within the dashboard, check those out. There's a lot of quick guides as well as additional information that just dives even deeper into the different calculators.
Yes, this is a great place to go. This not only explains how to use the wage earner page, for example, but it also walks you through the different calculations, the different documents that are utilized, some of our common guidelines for how we prioritize documents versus other documents. So this is just a great place to come just to inform yourself on how Ocrolus is providing calculations. But of course, if at any point this does not include the information you're seeking, you can always reach out to our team for support as well.
I don't see any other questions coming through the Q&A. Becca, thank you so much for joining us today. Thank you everyone on the call for joining. Don't hesitate to reach out. I do also want to note we have two certification training courses available online on demand for mortgage. Definitely take those. Those will be included in the follow-up email with the on-demand webinar. And join us at next month's Product Pulse. Thank you so much.